Hi, folks. Rick Wedell here. I'm the Chief Investment Officer at RFG Advisory. Thought we would come to you today with a brief market update, kind of let you know what's going on out there. S&P 500 right around 6,000. That is up about 2% year to date, just to sort of check in on a market level. And all eyes are on trade and tariffs. The administration coming out over the weekend and effectively announcing 25% tariffs on all goods imported from Canada and Mexico. It does exclude, it's only a 10% tariff on energy imported from Canada, then about a 10% tariff on additional goods and services imported out of China. I would just note that collectively, that's about 40% of the goods that are imported into the United States would be picked up by some form of these tariffs. And I think it's important as we start to think about what are the implications of all of this to really try and understand, like, what is it that the Trump administration is trying to do? There are really three reasons that most sort of allies of the administration have noted in terms of like why you would go down the tariff path. The first is national security. So particularly for Canada and Mexico, we share borders with those countries, and the administration would like to see those countries do a little bit more to enforce and sort of fortify those borders, if you will. Second reason is to shore up the competitiveness of U.S. industries, so make it easier for them to compete here domestically. And then the last is actually a revenue reason. So, we obviously collect money, or the government collects money from these tariffs, which is in a way a form of a tax. And you can take those revenues that you're getting from the tariffs and you can use those to fund sort of domestic programs at home. And it's also a sneaky tax because people don't really look at it as a tax. They look at it as, oh, you're trying to protect domestic industries. Tariffs are popular, taxes aren't. And so if you're thinking about ways the government can sort of raise money, doing the tariff path is a politically not a terrible one. If we think about those motivations in order, it sort of brings us around to a key question out there, which is the administration serious? This administration has done a lot of things, both in their prior term and in the early days of the current administration, where they will threaten and they will bluster about doing something, and they will use those threats to then extract concessions from whoever it is that they're negotiating against. And I would just note that we've already seen that with this round of tariffs, where Mexico pledged earlier this morning to send troops to the border to help fortify the border. And the administration announced that they would wait a month before those tariffs went into place. So very clearly, this continuing pattern of I'm going to threaten to do something and then use that as a way to extract concessions from whoever it is I'm negotiating with. And if I'm only really focused on national security, then that to me makes a lot of sense, because we can go to Canada, we can go to Mexico and say, hey, do this or else. And presuming that they do it, then we don't necessarily need these tariffs to be in place. However, if your focus is more on the competitiveness of U.S. industries or raising revenues to offset some potential tax cuts or help fill the coffers of the budget, the government, then by definition, those tariffs have to be in place for quite some time in order for that to be effective. Supply chains are very, very complicated these days. It's estimated that a single car made in the United States may cross the border back and forth between the U.S. and Canada up to 8 times before it's actually finished and out the door and sold. These types of supply chains are very, very difficult to sort of reimagine. And so if you're really going to be focused on the competitiveness of U.S. industry, if you're really going to try and onshore manufacturing jobs or do any of these types of things, that's going to take years for companies to make adjustments to. And so you can't just do like a tariff for a couple of months and then have it go away. More likely that those tariffs would have to stay in place for a while. And that gets us to what's the impact to the United States from all of this. It's estimated that the tariff package as currently laid out would reduce U.S. economic growth by anywhere from 0.3% up to a full 1% reduction in the U.S. growth rate as measured by gross domestic product. That's obviously not a welcome thing. However, I will note that with our economy typically growing recent numbers in this sort of 2 to 3% a year range, it's not as if the economy is going to come from a grinding halt as a result of this. No one calling for the U.S. to enter into a recession as a result of the tariffs. The same is not true of Canada and Mexico. They are very dependent on the U.S. for trade. And so if these types of tariffs were to go through, likely we would see recessions in those countries. And I would also just note that the market, being a very forward-looking thing, is already looking towards Europe, some of our other trading partners, where the Trump administration has basically said, you're next, and looking at what that impact might be. If you just want to look at the current impact of tariffs, you're looking at things like transportation, energy, capital goods, industrials. Those are the ones that primarily get impacted by the tariffs on Mexico and Canada. As we start to look at other goods, when we start to think about Europe, which may be in the pipeline. Bring it back to the Fed really quickly. As we see that weakening economic growth and as we see prices start to rise here domestically, that is going to give the Fed a little bit of hesitation around any further easing of interest rates as they wonder, I've got tariffs that will naturally be pushing prices upwards. I still don't want to let that get run away on me. Or don't want that to run away from me. And then, when I start to see weak economic growth, is that weak economic growth just a natural result of the tariffs, or is there something going on from an unemployment standpoint? And so likely that this will create a little bit of mud in the water for the Fed, which may leave them on hold for a longer period of time. Last but not least, I would be remiss if I didn't mention that it is earnings season. We've got about 180 companies that have reported out of the 500 in the S&P 500. Earnings growing at about 7.5%, revenues growing at about 4.5%, which is right in line with expectations for the quarter. So corporate America, at least, coming in with no surprises. With that, as always, if you have any questions, please feel free to reach out to myself or to your advisor. I hope you're having a great day, and I look forward to talking to you again soon.